Hello everyone, welcome to Mr. Bart's studio. In this episode of Accounting Made Easy, let's talk about what is business and types of organizations. We all know every company needs accounting. When we talk about accounting, we first need to understand what a business is. In most cases, business is any form of commercial activity carried out in order to meet people's economic needs, which is profit. Businesses can generally be divided into privately owned companies, non-profit companies, and state-owned companies. Now let's look at the types of companies. The first type of company we are going to talk about is sole proprietorship. Sole means being the only one. Sole proprietor refers to the companies with only one owner. Sole proprietor is easier to set up and it is the least costly. But sole proprietor belongs to unlimited liability company, where the creditors of the business may go after the personal assets of the owner if the business is not able to pay them. The next type of company we are going to talk about is partnership. Partnership, as the name implies, is a company with more than one owner. Generally, there will be no more than 20 shareholders. When the company makes money, the profits will be distributed among the shareholders in a certain proportion. Partnership can generally be divided into general partnership, which faces unlimited liability, and limited partnership, which faces limited liability. We will learn more about this later on in this video. The third type of company we are going to learn about is limited company. In this type of company, the accounts of the company and the accounts of the individual shareholders are separated. That means, if this type of company owes you money, it's considered as the company's liability and not the company's shareholder owe you the money. Limited companies can be classified into private limited companies and public limited companies. Private limited company. In Malaysia, you will see SDN, BHD in the name of private limited companies, which stands for Sendirian Berhad. Private limited company must have at least 2 shareholders. Private limited company is not a listed company, so the shares are not open to anyone to obtain without the approval from current shareholders. Public limited company. In Malaysia, public limited company will have BHD in the company's name, which stands for Berhad. Public limited company is a listed company and the company will sell its shares to the public. Anyone who are interested to obtain their shares can purchase them in the stock market. Now let's talk about the difference between a limited liability company and an unlimited liability company. The money of the limited company is separated from the money of the shareholders themselves. If the company owes you money, it's not considered as shareholders are owing you the money. So, if the company goes bankrupt, you can't ask the shareholders to repay you because their responsibilities are only limited to only how much they invested in the company. The money of the unlimited company and the money of the shareholders are tied together. If the company owes you money, It means that the shareholders are owing you the money. So if the company goes bankrupt, the shareholders are responsible to repay you the amount the company owes you no matter what.
Little Monster Quiz Time.
Which type of company does the following company belongs to? The answer is C. Private limited company. Did you get the correct answer? Which type of company does the following company belongs to? The answer is A. Sole proprietor. Did you get the correct answer? Which type of company does the following company belongs to? The answer is D. Public limited company. Did you get the correct answer? Which type of company does the following company belongs to? The answer is B. Partnership. Did you get the correct answer? That's all for this episode of Accounting Made Easy by Mr. Bart Studio. If you like our videos, please don't forget to like, subscribe, and hit the notification bell. See you next time. Bye.